Hello and welcome to lesson 4 of the course lesson. So I'm sure you can probably hear the noise in the background, and I think it's going to be here for the next 2 or 3 videos until I call a technician to fix the problem. So I just moved to a new apartment. This is my second one. So I have 2 running concurrently, and I'm still doing some fixes in this apartment. But I still wanted to record videos for you guys, so you're going to have to enjoy this. I think the mic still picks up the audio because I ran a couple of tests on this, so I'll resolve this later on, but for now we're just going to have to deal with this and get some content in. Today is not really a heavy topic as much. It is just a continuation from the last topic, and what we're going to be discussing today is market maker manipulation templates for short-term trading. Now, the first thing you want to do is we discussed the weekly profiles in the last couple videos or the last course lessons, and now what you want to do here is that you need to understand the entire premise for that weekly profile. What you're doing essentially is you're building a narrative from the higher time frame price delivery, and you are then translating that on the lower time frame in terms of narrative. Now, this is essentially the way price delivery works. So we're gonna go back to USD and we're gonna use the chart of that to define the concept for today. In terms of price delivery, what you have is higher time frame or higher level funds. Okay, so the progression is we have the higher level funds. I'm gonna make this a little bit slightly larger, and it's just 14. We have the higher level funds, and what happens here is price is going to seek higher level funds, and we're gonna put it here. We're more interested in monthly, weekly, or daily time frame, and then from that we have what we call daily order flow, which is what we're trying to define. We're trying to define daily order flow. So daily order flow is supposed to expand higher, and why should it expand higher? Is it supposed to expand lower, and why should it expand lower? That's the question we're constantly asking ourselves. And in this example here, we're more interested in intermarket analysis for a confirmation of order flow. Intermarket analysis. We're also concerned with relative strength. So you're looking at your divergence and you're looking at your strength comparison here. And also here you're also considering treasuries or interest rates. And this all helps you build upon your daily order flow. So here with the high level funds, you already are defining where price is more likely to see one-sidedness. Again, price needs to have a reason to move. If there is no reason why price should move, then you don't have a setup on your ends, because you need price expansion to execute on a setup. Because if the market stays sideways or in consolidation, you're not making any money because the market is moving nowhere. It's neither moving higher nor moving lower. So how are you going to make money? You need displacement to make money. Now, the high level funds, which is essentially monthly, weekly, or daily key PRA levels, you are trying to decipher a willingness in price. Not only just deciphering where price should expand up or down into, you're also gauging the willingness in price to want to do so. Meaning, if we're at a discount, what are the signatures indicating that we're likely to see expansion higher? Can we see a shift in structure? Can we see an expansion higher? When I'm talking about this, I'm not talking about the lower time frame. I'm obviously talking about the higher time frame price delivery. Okay, so what we're doing is we're creating a directional premise, and that's what these 2 things does in your analysis. So the first and the most important part of your analysis is defining daily order flow. All your high time frame analysis ends here, daily order flow defined. Okay, now let's run through the checklist for your high time frame analysis. You got your monthly key PDA levels, you got your weekly key PDA levels, you got your daily key PDA levels, you got your monthly program. Is it buy program or a sell program? Can that be confirmed with seasonal tendencies? This is what you're doing on the monthly time frame, and then you bring this down to a weekly time frame. Now, what are you more interested in on the weekly time frame? You're more interested on quarterly shifts. You're concerned with what open interest is doing, and you're also concerned with the commitment of traders report hedging program, not longer term. So with the longer term program, what you've done there is you're doing that on the monthly. So again, we're going to define all of this, and I'm going to do a new chart to do the entire endpoint of your high time frame analysis. And then once we've defined that, then we go down into lower time frame analysis. Now, note, I'm not looking at any notes or journal or nothing to go through the list. Okay, these are things I already know of, and I do on a day-to-day basis. So we're going to define all of that. Show you how simplistic it is. So it's not something you have to do. It's not a complex thing that takes a long time to get through, because I had a complaint about that before. That how long is it going to take for me to get through my analysis if you're bringing all these different concepts in terms of understanding where price should deliver up or down into? And we're going to break it down here. So with your RSI time frame, you have three key time frames. You have your monthly time frame, you have your weekly narrative, and then you have your daily narrative. The monthly narrative is what we call longer term analysis. Okay, so this is your long term analysis. Now, what's special about your long term analysis? What are you looking for? First off, what you're trying to identify is you're trying to identify key monthly PDA levels. What are key monthly PDA levels? What are key premium arrays? Could it be bearish shoulder block? Could it be a bearish value gap or an imbalance? And what are your discount arrays? Could it be an old low or a bullish shoulder block or a bullish breaker block? These are the things that you are concerned with, because that is where price will want to seek in terms of an objective or to refacilitate a new long-term macro transaction. That's where your concern is. So you first off need to identify your key monthly PDA level. And once you've identified your key monthly PDA level, now what you're trying to do next is you're trying to define your buy program or sell program. What program can we identify on the long-term time frame? Okay, so we're first off looking at the key monthly PDA levels, and from the key monthly PDA levels, we're now concerned with, again, this is long-term analysis, which is all monthly time frame. We're now concerned with understanding the program. What aids in this is our seasonal tendency. Okay, seasonal tendency is what, again, it's not a necessity, but it gives us a clue as to, is price more likely to see a more bullish macro or a bearish macro? Now remember, we don't know why price moves in specific direction seasonally, but what we know is during a specific season of the year, price is more likely to move in a certain direction. Again, that can aid in our understanding of price delivery, because there's something going on fundamentally which you and I don't understand, and we're never going to fully grasp, which causes the market to move in seasons. And that's what seasonal tendency does in terms of aiding our prognostication of price delivery. And then from looking at the seasonal tendencies, after identifying our key monthly PDA levels, what we're going into and watching for next is we're looking for the quarterly shifts. Okay, now remember, quarterly shift involves 3 to 4 months of price delivery. Alright, so where was the last quarterly shift? Where can we identify the last quarter of price delivery? Is the market more likely to continue in that direction of that delivery quarter, or are we moving into a new quarter for price delivery? So if the last quarter of price delivery, let's say, was, from November going into January, we're only seeing one-sidedness in terms of bearishness. Now, going into February and March, are we more likely to see continuous displacement lower, or a surprise at an high time from discount that could potentially see a short-term reversal in terms of a quarterly shift higher? if we're more likely to see a quality shift higher, what can we utilize to support our analysis? Does it align with seasonal tendency? Does it align with our key monthly PA levels? You see how they're all intercorrelated, or they're all interrelated? All these different things I'm bringing on here, they all either aid in your analysis or take away from your analysis. Now, you don't need everything to align for you to have a strong analysis, but you need the more things that align to support your narrative on the monthly time frame, the better your prognostication of macro price delivery. Okay, where prices go into the next couple months. So we have our quarterly shifts, which we're watching for. And then what is the monthly profile? Okay, monthly profile. We talked about this in module 1. There are 4 main profiles. We have your consolidation, you have a reversal, you have your trending, and then you have your retracement. Are we seeing a retracement back into a monthly range? Are we seeing a continuous expansion out of a parent price swing on the monthly time frame? Are we seeing a consolidation? Because a lot of this would all influence our anticipation in terms of range expansion or contraction on the daily time frame, which is our endpoint. The endpoint of our analysis is identifying or being able to, with a very high level of accuracy, like you're watching me do daily with the evening commentaries, with a very high level of accuracy, you're trying to define how each daily candle should paint. And it all starts with an understanding of this, understanding of the key high time for macro, and then going down into a short-term intermediate time frame view of price, and then finally going down into the daily time frame where we define our daily buys. And then from there, we are now watching into market analysis. This is on the monthly time frame. What are we doing with into market analysis? Is our narrative being supported by a correlated asset in a different asset class? If we have a bias in gold, can we see that being confirmed with oil, which is also a commodity? Can we see that being confirmed with the treasuries, which is correlated very strongly with gold and oil? Can we get that confirmation on the monthly time frame? This is where intermarket analysis comes into play, and that's what we talked about, the different asset classes, and now they are all interrelated. Again, the foreign exchange market is not just one separate entity. It's not a bunch of separate entities. Now I know it's a decentralized market, but they're all correlated through the interbank algorithm or the interbank market or price feed. Moving on one pair would usually have a ripple effect on the other pair, and that's the way it goes for a lot of the assets or instruments being traded. Alright, so we're looking at intermarket analysis, and then we're also considering market profile, sorry, market structure profile, not just market profile. So here we're looking at the monthly market profile, and here we are considering market structure profile. And when I say market structure profile, we're not just looking at price in terms of IIs and ILOs. Is the market making IIs and ILOs? We're instead considering price in terms of liquidity. Where is the next available drawn liquidity? This is what creates your one-sidedness, okay, on the monthly time frame. So I'm going to call this one-sidedness potential on the monthly time frame. Why is this called a one-sidedness potential on the monthly time frame? If we can identify a very clear lower liquidity run, okay, that creates a potential for price to see displacement, which is what we need to make money on our lower time frame. If the monthly time frame is poised to trade higher, then we know the weekly time frame is going to be more poised to trade higher, and the daily time frame will get in sync for upside expansion, and the lower time frame at key higher time frame discount will see rapid volatility coming to the marketplace. You see how I just broke everything down? It really is straightforward in terms of your analysis. And all you're doing with this, you're trying to nail down where the most likely general liquidity is. Starting off from the monthly time frame, understanding your macro delivery, macro price delivery, and then understanding how that ties in with your intermediate time frame, which is where we get down into the weekly time frame or narrative, and using that to blend into your weekly profile. And that's how you get very high profitable trades on your weekly profile. And from there, we then refine our understanding refined down to key monthly levels. Okay, so by going through our checklist for long-term analysis, we first will start with identifying our key monthly PDA levels. So what is our key monthly premium levels, and what are our key monthly discount levels? And then we go down into seasonal tendencies. Does it align with what we think price should be doing? Does that seasonal tendency also align with quarterly shift anticipation? Okay, does that align with our monthly market maker profile? And that market maker profile means, is the market poised to see continuation in terms of expansion, or are we poised to see some kind of reversal in price, which we should utilize to confirm with market structure profile. Market structure profile, we're essentially considering liquidity and relative strength, and also SMT. That's what we're looking for with the market structure profile. So we have a bias in terms of liquidity. Can we see SMT at a reversal, or where we're expecting a reversal? And is SMT confirmed with intermarket analysis? They're all tied in. All these different checklists, you're all tied in together, and usually they'll complement one another. Okay, the one will complement the other one. Usually, if you have a bullish seasonal tendency, that will complement with a quarterly shift for higher prices, which you complement with seeing SMT on the lows on the asset you're looking at, just some kind of SMT divergence, which will also be confirmed with some kind of intermarket analysis, aka we're looking for higher prices on USD/JPY, then we're most likely to see treasuries wanting to trade lower, since we're trading USD/JPY, and we're more likely to see dollar trade higher. And that will be confirmed with dollar making lower lows and our pair, which is USD/JPY, making higher highs. So what I'm going to do here is I'm going to do that on USD/JPY actually. So this was the pair we talked, or we essentially used for our examples on module 2 of the course. So I'm going to bring that back up so we can just run through the checklist for monthly, or what I call long-term analysis. And then what you always want to do is you want to start with the long-term analysis, and you don't do this every day. Okay, what I usually do is I do it at the start of the week. That's why you see me do the weekly prep videos. At the start of the week, I'm going through the long-term macros, and I'm pointing out the important things you need to watch out for, or draw attention to, or I draw attention to important things you need to be watching out for. So with USD/JPY, we already called all of this price higher. We're looking for continuation higher on USD/JPY from, I think, somewhere down here. Now again, if we I think we went through this during the month of April. I think it's April, either April or May. So May, no, mid-April actually. We're looking for bullishness from here. All right, and we're looking for the market to trade up into this, and potentially even this high up there. Now, just to go through the monthly or the long-term analysis and what that will look like here, you can see this high up here is as a result of the range from here. So we have a range here, and what I'm going to do is I will take this down to a weekly time frame. Excuse me. I will take that down to a weekly time frame, and to get a clearer narrative. So usually when I'm using the Fibonacci extension levels, I like to use the bodies of the candle because the body reflects the true range. Now the question is, when do you use the bodies of the candle versus the wicks of the candle? If you're trying to measure equilibrium versus discount, okay, or equilibrium versus premium in a range, you use the candlestick wicks. Now, there are different kinds of candlestick wicks. There are wicks which are large like this. So whenever I see a very large wick relative to the body of the candle, that is a stop run. I don't usually take that into consideration. So if I wanted to identify premium of this range versus discount of this range, my Fibonacci, it will start from the absolute high of this candle here, and usually you would want to use your Fibonacci down here because this is where this wick ends. but this week is a wilder week because it was a run on stops. Okay, it was a run on these level of stops. So I'm not interested in this week because it's not. It's very, very, very thin volume. So I'm going to look for the next lowest week, which is this one here. All right, this week here is what I'm going to use for my premium versus discount, and you can see how the market trades up into. If I add in the, let's go to and add in the 0.71, and you can see how the market trades up into that and sells off. Now, I typically don't use Fibonacci for. I don't use the Fibonacci extension level. Retracement levels. In my range because I already know premium versus discount in the range. I don't need Fibonacci to know what PDRA I'm looking for. But all I'm interested in is identify the middle point of the range, and I already know anything above that is premium, anything below that is discount, and I know what PDRA I'm looking for. But when you're looking for, or when you're utilizing extension levels, it is different from using or trying to decipher equilibrium versus discount or premium versus equilibrium. Okay, when you're looking for extension levels, you're using the bodies of the candle. So I want to clear that out on this video, so just no questions about this. So we're using the bodies of the candle here, and you can see the high, which is a 200 or 1 standard deviation from this range. So standard deviation essentially is if you measure the range from high to low and you put it above this range, you get a full standard deviation. 1.5 is half a standard deviation of this range. Usually I like to hold for a 1.5 and then I'll hold for the 2 extension level. And you can see up there is where we have the market trade up into and cap of a short term or a long term high. Okay, prior to this forming. Now if we go out to a monthly time frame and we look at price from a monthly perspective, what we're trying to identify is our key PDRA levels. Okay, what are our key PDA levels? What are our key premium levels? What are our key discount levels? That's what we're trying to identify in price. So we have a bullish order block here, and what stands out so far is the body of the bullish order block here. All right, and you can see how this candle trade on there and this trade on there. And look at the low of the candle. The low of this candle is precisely where the body of our bullish order block starts from. This is our discount rate that stands out to us. Also, we have a propulsion block here because this order block comes inside of this. So we have an order block inside an order block. Usually that's a propulsion block. Now let's take the body of the candle there, and you can see we're identifying our premium, sorry, our discount rate, and then at premium we have obviously this fair value gap up here. So we have an old fair value gap up here, and that is, I usually use a red line for that, so we're going to use a red line for that here. And let's make this one line. And that's our monthly fair value gap there, monthly level. Now, if you go for the checklist, what does seasonal tendency indicate for our dollar? Okay, what's dollar seasonal tendency indicating price? So we're going to go and look at dollar and look at the seasonal tendency. And the reason why we're looking at dollars is because the pair we're trading is USD/JPY. So obviously the seasonal tendency of dollar will influence the movement on USD/JPY. And you can see around the month, so we're currently trading the month of April. During the month of April on dollar, we can see that dollar usually is poised to see weakness. Okay, so we know that the month of April, DXY usually is very, very bearish. But we can see USD/JPY is bullish for the month of April. No willingness to be bearish. Now, this is why I say seasonal tendencies are a guide if you know how to use them. What I love you guys to do is I love you guys to look at seasonal tendencies and say, because dollar is bearish during the month of April, so we should go into the marketplace and try to look for sells on dollar yen. But that's not how it works. If we can see that dollar is supposed to be bearish in the month of April, but USD/JPY is actually bullish for the month of April, there is something fundamentally going on. That means on that asset we're looking at, there is an underlying strength on the asset because it is not bowing down to seasonal tendency. Again, it's not just any random seasonal tendency for dollar to trade lower. It is a very strong seasonal tendency for dollar to trade lower to the month of April. This shows a 33-year pattern, 15-year pattern, 5-year pattern. All of them, all three of them, all three time periods shows a very strong willingness on trade, very, very exponentially lower to see massive displacement on the downside. We're not seeing that during the month of April. That means this is the pair we're looking for longs from because it's not showing willingness on to be bearish the month of April. Now, if we compare that against dollar and see what dollar was doing during the month of April, you can see dollar very clearly is trading lower, but USD JPY is not trading lower. So it all ties in again. So we're not seeing USD JPY trade lower. So go and look at market structure profile where we consider it a strength, SMT. We have relative strength on the side of dollar yen. See? So now, typically, what you would expect is seasonal tendency says lower prices, so obviously I want to see USD/JPY trade lower. But we're not seeing USD/JPY trade lower, so that means there's a very strong commercial accumulation on dollar yen. And that is confirmed with relative strength, whereby we put up a chart comparison of dollar, and dollar actually shown the willingness on trade lower for that month of April. But dollar yen is not showing that willingness to want to trade lower against dollar. So that means there's an underlying professional accumulation on the way on this pair. So this is the pair we want to be buying. We want to be buying this pair. Especially, and this is the key thing here, if we shift into the month of May where it's seasonal tendency for bullishness on dollar, we are going to see an exponential upside. Because imagine, if we're seeing bullishness when it was supposed to be bearish, what do you think is going to happen when seasonal tendency now flips into bullishness? Wild price swings. Now I'm going to go back and use the replay tool, but I just want to show you what that would look like. Okay, so for the month of April, when we're supposed to be bearish, we saw bullishness. Now this is the month of May. Now look what happens before I go back. So the replay tool was 25th of April. Now, watch what happened during the month of May. Can you see that explosive upsideness? And can you see what the market's doing? This is obviously the jitter swing for the month. And look at the consequent delivery higher for the month of May. And you're seeing large ranges. Why did you see a very large range on the upside on USD/JPY, while April was a little bit of a consolidation? Because the month of April, seasonal tendencies indicated weakness. So even though there was an underlying strength in this, there's not going to be a ton of upside like the month of May, where seasonal tendency aligns for strength. Do you see how you can use seasonal tendency to gauge the strength or weakness fundamentally of an actual asset you're trading? There's more to seasonal tendencies than you think. There's more to that. So let's go back to replay tool and go back to, I think it was 25th. So we're gonna clear all of that. And I just realized I've not eaten since yesterday, and I am really hungry. So I might probably divide this video into parts, and we're gonna go like do part 1, part 2, or something like that, because I am absolutely famished right now. So here you can see again just an easy breakdown, and I don't want to go down to a daily time frame. We're more interested in the monthly time frame. And all I've done here by using seasonals and by using market structure profile and by identifying our QPD levels is we already know what we're looking for. We're looking for bullishness, just nothing else we need to know. Okay, so far on the in terms of market profile, if you guys are looking at this monthly market profile obviously looks like a retracement or reversal to the upside. Now, I'm saying retracement because in this monthly range, it could trade up into this and then continue to sell off. That's a very strong possibility. We don't know. All we know is there's a potential for one-sidedness up into this monthly fair value gap. And now we're done with our monthly analysis, our long-term analysis. We know for the next couple of weeks we're looking for bullishness on dollar yen. easy. What do we do next? We go down into our weekly or intermediate term analysis. You see how easy it is and straightforward it is when you're doing long-term analysis. A good long-term analysis usually will have a confirmation of multiple checklists. Okay, you're going to have multiple checklists for a good long-term analysis. So again, you can take a screenshot of this, you can write this down, you can write this in your notepads. When we get into creating models, we're going to talk about this. This is just the basic part into your analysis. All right, so when you get into creating models, we're going to talk about defining an eye time frame, order flow, which I will direct you to watch this video, and then you can then go into your daily time frame. Once you've defined your daily bias, then you already know what you're looking for, and it's really straightforward from there. But we need to get down into defining that daily bias first, and then talking about the market maker manipulation template for the weekly range profile. I'll see you in the next video. Trade safe.